The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Dave Abner, Global Head of Business Development at Gemini. Welcome, Dave.
Hi, thanks for having me.
So just starting out with just a general crypto markets overview. I mean, to be frank, the crypto markets have been kind of boring by crypto market standards. It's been kind of trading in a range for a while now. How do you interpret that, and when do you think we'll get out of it?
Well, look, Emily, boring is good in markets, really. That's kind of what you want to see, right? I think if you look at the top coins, Bitcoin, Ethereum, they're really building a very solid base right now. They've been sort of consolidating around 40,000 for Bitcoin, 3,000 for Ethereum, and you are seeing new accumulation by new investors all the time, and you're seeing some people that have held for a very long time diversifying, going deeper into the space. I think these things are very healthy for the markets. I'm positive.
So, Dave, speaking of going deep into the space here, you guys, of course, you're launching an ETF in Australia, and that's something, a spot ETF. That's something that you can't quite do in the U.S. Yet, or maybe until the end of Gary Gensler's reign at the SEC. So what is it that the Australians see that the Americans don't, and what is it that the Americans see that the Australians don't? Obviously, you're going to say everything's hunky-dory with having a spot ETF, but do you think that there are any concerns that the American regulators have that you think need to be at least addressed or at least need to be more elucidated, if you will, and before they approve it? Do you think that they might have a little bit of a point?
Great questions, Lawrence. There's a whole bunch in there. I'm going to unpack them a little bit. Just to clarify, one piece is that Cosmos is launching the ETF, and Gemini Fund Solutions, run by Gemini, is the infrastructure behind that ETF. Just to clarify that point. Regarding the regulators, and in the U.S., look, I think the U.S. regulators are paid to be right. They're not paid to be first, okay? And I think they've been very, very thoughtful about the entire crypto industry. They are taking steps, what I think of as slow but very thoughtful steps, to bring the U.S. to a sort of regulated environment for all crypto overall. A lot of conversations around Bitcoin ETF being the leading piece of that, and they've made some movements towards that, right? They approved the 40 Act version of a futures Bitcoin ETF several months ago. There's a few of them in the market. Just recently, they approved a 33 Act version of a futures Bitcoin ETF in the U.S. So that will be coming to market soon. I think that's a very positive step. And you mentioned, sort of, do we have to wait for the end of Mr. Gensler's reign? I actually don't think that's true. I think roughly around this summer, you're going to be seeing a spot Bitcoin ETF approved in the U.S. markets as well. So I don't think the U.S. is behind. I think they've been thoughtful about it. And it's very constructive for the launches in Canada, the launches coming up in Australia. Everything that's been happening in Europe has been, sort of very valuable and educational for the market overall.
So what gives you this idea that it'll happen in the summer? Is there do you have any indications or anything that you've heard from the SEC, or any clues that you might have that would indicate that this could be forthcoming?
Yeah, unfortunately, I don't have a bat phone to the SEC here in my office, so I haven't spoken to them directly, and I have no particular insight there. But what I do see are the way they've taken steps, and really this most recent approval of what I call a 33 Act fund by Tucreum's filing, basically. That approval really sets the stage for the approval of a spot Bitcoin ETF. It will have to be launched under the 33 Act as well. So it removes that sort of investor protection need that the SEC was potentially looking for between the difference of the 40 Act to the 33 Act. I think the SEC has gotten comfortable with liquidity. There are now firms in the market like Gemini that really provide, full institutional class custody and trading of Bitcoin and other cryptos. So we are, Gemini is an institutional firm. We're regulated. We're a New York trust company regulated by the New York Department of Financial Services. All of these things look like traditional custodians and the traditional workings of the financial markets. So I think all of this being in place now has given them comfort, and they've taken, like I said, I think they've been very thoughtful, and they've been taking these steps, and this is just going to be the next step.
Dave, you're global head of business development at Gemini. So can you talk to us a little bit about some of your global priorities? Where are the regions that Gemini sees as kind of the most strategic going forward? Are you reaching out into any new territories?
Great question. So Gemini is a global firm. We're available in more than 70 countries already. We have our headquarters is in New York, but we also have offices around the country and in Asia, in Singapore, and in the UK and in Ireland as well. We are focusing on making crypto available to all investors, really wherever they sit, right? We believe that, we want to empower people with crypto, basically. So a wide variety of uses for crypto. There's lots of different ways to use the ecosystem, right? Gemini provides an exchange where people can obviously buy and sell and bring whatever their traditional fiat is into the ecosystem. And we also offer a wide variety of products around that. We have a credit card where people can earn crypto rewards. We have an earn product where you can actually earn yield on your crypto. So if you think about the Gemini dollar, which is our stable coin, actually, you can convert your traditional US dollars into Gemini dollars. You can put those into our earn product and earn a yield on your cash. So if you look at the low yield environment we've been in over the last 5 or 10 years, earning a yield on your cash is a tremendous accomplishment nowadays. So that's a real benefit of thinking about some of the products that Gemini brings to the market for people. And then we also offer infrastructure for other people in the crypto ecosystem to build businesses, right? That's a very important part of what Gemini does. Like if you think about the ETFs, we are the largest provider of fund services to crypto ETF issuers around the world. So there's crypto ETPs in Canada, coming in Australia, in Europe, and in the US that are all built on Gemini's ecosystem, infrastructure, right? And we're also looking at the advisor market because we think that's probably the fastest growing pool of assets in the world that will start to use crypto more and more.
So, Dave, you mentioned yield products. Of course, the American regulators, the SEC, has come down hard, and a lot of the local state regulators are also coming down on the likes of the BlockFis of the world, et cetera. And they seem to frown upon these kind of yield products. So, what is different about what you're providing? How are you going to get? I don't want to say get away with it, but get away with it as far as the SEC goes, and as far as the local regulator goes. What makes you guys different?
So what makes us different is our philosophy on how we bring products to market. We ask first, and then we bring a product to market. Oftentimes people bring products and then ask forgiveness. That's not our philosophy, right? Gemini was founded in 2014 by the Winklevoss twins, and their entire concept was bringing a highly regulated, traditional financial-looking firm to the crypto markets, right? To make things look as sort of standard and regulated as possible for investors, and we've done that all the way through. So what that does is it actually slows us down. We were not the first to launch an earn product, a yield product on a crypto. However, we are still in the markets. partially because I would imagine that's because we took a very, very conservative approach to how we run the product, and we worked hand in hand with our regulator, the New York Department of Financial Services, to ensure that they were comfortable with what we were doing before we came into the market, right? We did not use, you guys were talking about Twitter, right? We don't use Twitter as a public platform for discourse with our regulators. We work very closely with them to not put them on the spot at any point.